Okay, it's noon now, so let's get started. Hello everyone, my name is Kelsey Lefebvre, and thanks for joining us today. Welcome to the 2025 Apple Outlook webinar. Before we get started, I'd like to offer a few technology tips to keep in mind while you're viewing today's webinar. First, all attendees are muted throughout the presentation. Once in a while, it's a good idea to tap your mouse so that your screen does not go to sleep during the presentation. And there will be time for questions and answers at the end of the presentation. Questions can be text chatted in at any point during the presentation. To send in your question, click the question mark button on the right side of your screen to expand a question box where you can then type in your question. And lastly, a recording of today's webinar and the presentation materials will be available at farmcrediteast.com as well as on our YouTube channel. And now a quick disclaimer, this information is presented in good faith and is not intended for investment, tax, or legal advice. So today we have Chris Gerlach, Vice President of Industry Analytics at U.S. Apple, joining us for our 2025 Apple Outlook. So I'll now hand it over to Chris.
Thank you very much. Can you see my screen and hear my voice?
We can hear you, but we don't see your screen yet.
I need to take control, or are you giving me control?
You should be all set as a presenter now.
Okay. Can you see my screen?
Nope. Here, let me try it.
It worked 2 minutes ago.
Okay. Did you get anything
There it
now?
is.
Okay.
Yep. Okay, can you see this?
So we see your PowerPoint
Yep,
app
perfect.
open, but we don't see it in presenter mode. I don't know if you've already put that in.
Okay, should be ready to go.
We still see just your, there we go. Now we can see it.
We're ready to go?
Yep.
Sorry, everyone. Okay, perfect. All right. Sorry about that, folks. Little glitchy internet here at the office. All right. So yes, this is the Apple Industry Outlook, and thank you to Farm Credit East for hosting me today. I'm going to jump right in. We got a lot to cover today. So we are going to start with some context around what's going on in the industry, talk about some supply and demand situation, then go through some prices, costs, and returns, kind of as we are at the end of last season and through this season to date. We're going to do a quick primer on tariffs, and then go through some of these direct effects. What are the impacts to our industry from tariffs on the imports, and then some indirect effects when our trading partners retaliate. What are some of the impacts there? And I'll just give you a quick apology in advance for all the numbers that I'll be presenting today. Typically, I try not to put too many numbers on the screen, but I think it's important here, given that the uncertainty in the situations are in flux right now. We don't quite know what the rates are going to be, who's going to retaliate, to what extent. So I put a lot up there. We're not going to talk every number, but I think this would be a good reference document in the event that we get more clarity down the road. So with that, let's just jump in. If you remember USDA, this is their production, these production figures for the United States. They are calling the top production year back in 2014 at 282 million bushels. But if we remember in 2018, the USDA stopped tracking production outside of the top 7 states. So I've estimated that back in, and based on those estimations, I think we hit our new max production year last season at around 289 million bushels. Just for context, again, that's 3 billion on the fresh valuation, processing 400 million, with a little bit being unsold every year. So how did we stack up this year? The USDA will come out with their final May revision for production this season next month, obviously in May. And so for now, we're left to just sort of look at December volumes to try and, or December storage volumes, to try and estimate whether or not we think that our August estimates were on track or not. So to do that, we're looking at those December storage volumes and saying in general they're about 56% of total final USDA production. You can think about the other way and saying that gray portion of the bar is to say that 44% of the apples moved prior to December 1st of any given year. So if our August estimate was 260 million bushels, one of two things is true, or a combination of both. Either pre-December movement has been relatively slow this season, closer to 35% versus the 44% 5-year average, or our August estimate was light, and pre-December movement was on pace at closer to the 44% rate. And if we do that, we get somewhere between this 260 and 300 million bushels. So let's call it somewhere in the middle at around 280 million bushels. And just to keep me honest, this is where this analysis led us last year, and that's showing the final USDA number in between our low and high estimates. So again, expecting somewhere close to 280. So let's check the postulation that preseason movement has been light. So here's the harvest seasons for the last 5 years: 52, 54, 46, 43, 49, 59 million bushels moved during the 4 months of the harvest. And so it would appear that no, pre-December movement was not light. In fact, it was more robust than average. So that tends to point towards the higher end of that production estimate. But if we disaggregate these by what is last season's crop versus this season's crop, we see that about 26% of that harvest season movement is from the apples in the prior season, 30%, 26%, 32%, 31%, and 39%. So we were moving more than the average number of apples because last season's production was so high. We still had a lot of apples left over, and we were filtering those. Basically 4 out of 10 apples sold during harvest were the prior season's apples. And so if you think about that as being, well, maybe pre-December movement was slow related to this season's crop because we were moving last season's apples. So again, that puts us somewhere in the middle of the range between that 260 and 300 mark, somewhere close to that 280. So here is how movement is shaping up this season. If we go back and look at that last big season we had, the 2014-15 season, production fell by 15% the following year, gave them a little bit of respite. But you see, I put that yellow dashed line at 13 million bushels. That's really the target that you have to hit when you have a year of 280 million bushels or more. Last season, you see a few of these months we didn't quite make the line, a couple months above, but so we still had obviously a lot of apples to move through the next year. Production, as I said, down only about 3%. So we had 2 back-to-back, really great years on production, and so we've kept the foot on the gas. It's really great. We've exceeded. We've met or exceeded that 13 million bushel a month mark for a number of months, and it's great. In fact, this November data point is the highest November movement on record that I have. So doing a really good job to move those old apples and those new apples. So what else is different between the 14-15 season and now? Well, we were exporting a ton of apples back 10 years ago. 2 seasons ago, that export volume was down 41%. Last year we did a great job increasing by 47%. Again, to offshore as many of those apples so we had fewer to compete with here domestically. But we're still down from our peak, down 13% as of last season. How are we shaping up this season? Well, compared to that big season, actually that 14-15 season was our all-time high in terms of exports, and we're about 4 million bushels, almost 4 million bushels below where we were a decade ago, and we're about 2 million bushels behind where we were at this point last season. So we need to keep our foot on the gas there, but we're going to talk a lot more about trade in a minute. To round out the supply picture, let's look at imports. This is a decade ago. This was the profile. You had 10 million bushels coming in before the season started. As soon as this big season hit, they turned off the tap. Then the following season, they didn't need as many because they already had a lot. So they were able to reduce that by 30% down to 7 million bushels. But again, they brought it in pre-season, counter-cyclical, and then turned off the tap after they figured out how many they had in August. This now, 10 years later, that profile is changing. We're bringing in half as many as we did a decade ago. That's great. We got plenty of apples here, but you see that we don't quite shut off the tap to zero after we get in a big harvest. We're still, we've got longer term contracts, and we're trying to please these retailers and have to convince them that we've got a deep enough bench on some of these varieties that we might be short on, and so we have these longer term contracts with foreign suppliers for various apples. So this year so far we're at 4 million bushels, but the profile is looking a little bit down, but still, kind of repeating that trend. So these are, the sticky imports. A decade ago, the post-August imports were 2% total. In last season, they were 32% of total. So let's switch to the demand side. This is the fresh apple consumption, or a proxy for it, USDA's per capita food availability. You see back in the 80s and 90s, close to 20 pounds per person, and it's been falling since then. The latest data have us at about 16.5 pounds per person. So that 2.2 pounds per person per year may not seem like a lot, but that's basically the production of Pennsylvania and Virginia combined. So, it's definitely something that we need to look into and, do our best to increase that global consumption, or that U.S. consumption, closer to global averages. So this is these are the retail prices, the CPI for apples. We saw back a decade ago that huge crop sent prices falling 12% throughout the season, July to August. We had an even bigger fall this time because I guess we were at a higher point and had further to fall. So the 23-24, we fell July through July, down 15%. Since that time, apple prices, at least at the retail point of sale, have begun to recover a little bit. July to March, we're up 8%. These are grower prices, shipping point prices. This is for last season. So when we had that huge crop, Honeycrisp started out between 65 and 70 for a carton tray pack. We fell through the season down to close to $30 a box, down 55%. So that was really hard. I think that's below the cost of production for those. We were kind of racing to the bottom to make sure that we weren't holding any Honeycrisps at the end when there weren't any buyers left. And so that was a tough season. When Honeycrisps got discounted, every other variety down the line had to get discounted in order to move. So we had a cascading effect. Grannies were down 45, Golden's down 20, Fuji's down 18, Gala's started down and then recovered a little bit because they were a little bit short, I think, last year. Red Delicious down close to 30%. So last year, tough season, not really recouping the cost of production there from the grower side. How are we doing this season so far? Well, prices have started to recover. Honeycrisp up 121%, back up between that 65, 70 bucks for that 40-pound tray pack. But we're not having as much of that reverse cascading effect, unfortunately. So they aren't pulling up the prices as much as we saw them push down the prices last season. That's a little bit unfortunate. Granny's down 12, Golden's 14. I think these are more correlated with the supply levels this season. Red Delicious 9. Honeycrisps. And then Cosmic Crisps down 22%. This is a new data point. USDA just started tracking Cosmic Crisp prices back in November, and I'm glad they are because we've got a lot of them coming online. The April U.S. Apple Tracker storage report that comes out monthly, that April report, the Honeycrisps very, very short this year. We had just under 8 million bushels versus 14 million bushels last April. So they're down 44% year over year. And the Cosmic Crisp prices, or Cosmic Crisp levels. So if we had 8 million Honeycrisps, we got almost 10 million Cosmic Crisps. So that was 6.5 million at the same point last year. So Cosmic Crisp availability, supply is up close to 50% year over year. So that kind of helps explain the movement of those prices there. Producer price index. So this is the cost of production. Last 10 years ago, we were when we had that big crop, prices were as they were. They've gone up 44% when at the start of the season last season when we had that big crop. They did fall. We got inflation under control a little bit through the mid of last season, but they've started to creep back up 9% since that low point of February 2024. And so let's just round this the final context slide. Apple orchards, obviously, they contract with the storage warehouses and pay a fee to store their apples through the season. Then they pay to run their apples down the line. Then they pay a commission on the sales and marketing. And at the end of the day, they hope that the check that they get back for selling those apples minus those commissions is enough to cover those input costs that have already been paid for. They've paid for the labor, they paid for the fertilizer, pesticides, etc. In 2023, that check, the input cost they already paid for was 37% of those net grower returns. In 2022, it was 70%, and last season it was 99%. I'm sorry, not all input costs, just the labor. I'm sorry, that's just the labor piece. Labor was 99% of that net grower return. This is from a Washington apple grower financial analysis, a pretty robust sample size. So obviously not true for every grower out there, but some of the largest growers out there participated, and it's pretty stark, showing the rise in the cost of labor as a percentage of grower returns in a really tough year when prices are down. So with that, let's switch gears and talk more about trade and tariffs and kind of what we're looking at going forward. So at this point, uncertainty is reigning supreme. We don't quite know what's gonna happen, when it's gonna happen. There don't appear to be any rational arguments that could be made to move the needle. It's more sort of on a whim. So in February 2025, we started imposing a series of tariffs on select imports. These actions have prompted our trading partners to respond with tariffs of their own. The details of this reciprocal trade war are constantly changing. As such, it is impossible to predict the full extent of the impact to American apple growers, processors, importers, and the economy at large. So here are 3 relevant developments. Certainly, there's more details that we do know, but sort of the ones that are going to impact the apple industry and we'll be discussing today is that at this point, imports and exports from Canada and Mexico that are USMCA, that is the NAFTA replacement compliant, are exempt from tariffs. That includes apples at this point, but as we know, anything can change. And I put the likely with an asterisk because it's assuming that those apples are fully grown in these countries and that can be proved. So you need appropriate record keeping and to be eligible for that exemption. So they should be exempt if they are and you have those records. But that could change at any time and retaliation could occur. So what else? Goods coming from China at this point have a tariff of 145%. Goods going to China have a tariff of 125%. Goods coming from almost every other country in the world have a tariff of 10%. This is the 90-day pause. He put a series of, the administration put a series of tariffs on all different countries, varying levels. Those reciprocal tariffs, as they were called, have been paused through July 9th, and a number of countries have come to the table to begin negotiating. And so, again, don't know where the outcome will land on that, but the following analysis isn't necessarily an exact impact analysis. It's more about laying out what's at stake should any of these negotiations with any of these countries go south, or should they capitulate and drop their tariffs, and so what can be gained as well. So let's start with our Tariff 101 discussion, just to make sure that we're all on the same level playing field here. So what happens the instant the U.S. government places a tariff or a tax on goods imported from a foreign country? That means U.S. companies importing those goods have to pay that tariff, that tax, to the U.S. government. And as a result of that increased cost of goods, they will likely reduce buying from those particular suppliers. To the extent possible, U.S. companies will pass along that cost of the tariff, the tax, to their retailers or their end consumers. U.S. retailers then in turn pass along the higher costs to consumers in order to maintain their margins. And the U.S. consumer ends up facing higher retail prices and are left to ultimately pay the majority of that tariff or tax. On the other side, the impacts of the effects, the indirect effects of the export tariffs, the retaliation. Foreign governments place retaliatory tariffs on goods imported from the U.S. Foreign companies now forced to pay higher costs for U.S. goods. They stop buying U.S. goods to the extent that they can. U.S. companies lose export sales, goods stay on shore and compete domestically. And U.S. retailers leverage excess supply and minimize costs by paying low-priced producers. We saw what happened with that supply situation last year. U.S. retailers may pass along some of those savings to consumers in lower prices. So that is just kind of, again, baseline of the mechanisms how that are going to work. So let's just look at what our trade summary is across a couple different categories for which we have data. On the fresh apple side, we have a healthy positive balance of trade. We send out close to 47 million bushels and we bring in only about 4 million bushels. So on the dried apple side, we're exporting 1.5 million pounds, bringing in close to 13 million pounds. So we have a negative balance of trade on the dried apple side. On the apple juice side, huge negative balance of trade. We are sending out 16 million gallons, bringing in 430 million gallons. On the value side, that means that our positive balance of trade is worth about $1 billion on the fresh apple side. Dried apples were negative 36 million, and apple juice negative 621 million. So that leaves us all in across those three categories, still positive, about $300 million. But obviously the mechanics of these tariffs and retaliation is going to differ depending on whether or not we have a positive or negative balance of trade. So let's start with the challenges of the direct effects, the U.S. tariffs on imports. quite obviously, prices, as I mentioned, will increase for importers of fresh apples and processed apple products. Where are the opportunities? Well, the prices will increase for growers of domestic processing apples as those become more in demand, as the foreign supplies become more expensive, so we expect that they'll be getting slightly better prices for domestic processing apples and domestic manufacturing. The severity of these impacts will be determined by the relative tariff levels, global supply and capacity constraints, and the ease by which importers can switch from one producer or country to another. So the harder it is to switch, the more you're going to be stuck with those higher costs, and the more you're going to be hurt there. So let's start on the fresh apple side. Canada is our number one in terms of importing apples by volume. Canada is number one, and those are exempt from tariffs, as I mentioned, theoretically under the USMCA. Chile is our number two import market, 33% of our imports, worth about 40 million. With a 10% tax. Again, these tariffs and tax, the percentages and the dollar volumes, that's theoretical based on no change in buying behavior and volume. And so this is just, again, showing what's at stake if things remain as they have. But we do expect some of these, you can't quite switch away from the 10% at this point, given that that's a blanket rate, but maybe there are some negotiations in the future or other things, but this is sort of the max impact based on what we know now. With New Zealand and Canada, you see that if we were ranking this by value, New Zealand would be the top. They are sending us higher value varieties than Canada. But in China, China's our number even on the fresh apple side. Surprising that we're bringing in around 150,000 bushels from China. But again, that tariff rate is ridiculous. We will stop buying those fresh apples and will not pay that 3.75 million. Argentina, again, is number 4, and then other. So we don't have a super deep bench. There's only about 10 or 11 countries from which we're bringing in fresh apple imports. It's important to note that even the threat of tariffs was enough to damage these relationships. I know that some of the apples that we're sending to Canada, I guess this is more of the export discussion, but that some of those sales were canceled even though the tariffs didn't go into place. So it's important to know that the words matter, and these relationships are built over a long time. So again, not saying that this is what's the final tariff bill is going to be, but if things remain as they are and we continue buying as we have from these countries, it would cost growers around $12 million. On the dried apple side, here's how it works out. We have Chile, number 1, close to 50%, then China, Argentina, New Zealand, Turkey. Turkey is by value or by sending us the cheaper dried fruits, about 1% by value. And then 17 other categories, not for all that much money, but still the total tariff bill there, assuming no change in behavior, is around $22 million. So again, that would not happen. Most of that, 19 million of that, is from China, and obviously I think those dried fruit importers from China would find different sources as quickly as possible to avoid that. On the juice side, this is really, this is where we have that big negative trade balance, and where the importers are really going to feel the pinch if they can't find a way to switch. So Turkey at 40% of our imports. This is again 2024 trade levels. 2023 will look different, with Poland being up here, but China, our number 2 export market, and obviously that 219 million tax bill, as I said, will be avoided to the extent that it can be. But, it's unclear. I've spoken with a number of processors. It's kind of unclear if switching suppliers in the apple juice concentrate world is any easier than it is for the fresh side. As I'm hearing that these are year-long at least contracts, and sometimes longer. And they may be able to get out of some of these deals by citing force majeure or something like that, but that burns some bridges and maybe isn't a great look. So I think they're going to do whatever they can to. I think they've already started to bring in advanced. They saw this coming, and the U.S. buyers of this foreign juice have stockpiled as much as they can, hopefully. And have 7 to 12 months of supply on hand while they figure out other ways, other markets that they could go to. But some of these buyers, obviously we're bringing in a ton of this juice, and it's not necessarily easy to get that much supply from these other countries. And I think there are also quality control protocols that mean that they have to vet these producers and test them out, and et cetera. So it's not just a seamless, quick switch that can be made. So hopefully there's enough domestic capacity at this point that they can use, they can draw down on while they get other plans in place. But it takes time. In the meantime, prices for all these juices, for whether it's Turkey or Washington State, the prices are going to rise because everyone's going to be trying to switch to these other sources, and that's going to create increased demand and increased prices. The domestic demand or the domestic capacity for juice production isn't nearly enough to satisfy this demand. So, I think there are folks in discussions to ramp up domestic production, but again, that takes time, that takes investment, and the extent to which there is the capital standing by waiting to make those investments in an uncertain future, I'm not sure that that's going to happen immediately. So, I think we're stuck with a lot of foreign suppliers at this point for the time being. I think it will also, as we'll see, increase the price of domestic processing juice as we do max out our domestic concentrate production, our domestic juice production. Ukraine, 6% in 2024. South Africa, number 4, Moldova was number 5, and of course a very deep bench on this, 51 other suppliers worth around $152 million. So let's, at this point, again, it's a little ridiculous to say that we'll be paying $219 million to China, or at least because of China paying that tax to the U.S. government. But again, this is assuming no change in volume. If we break apart the other category, we see Chile, Brazil, Spain, Argentina, Poland. Again, Poland was number 3 last year, so that does, these numbers do fluctuate. It was, I think it was worth 80 million, 57 million gallons last year. New Zealand, Canada, Italy, France, and Mexico. Again, depending on how these negotiations go with these individual countries, you may be referring to these slides later to sort of see where you might be going for your juice. Obviously, the question is, which countries can we switch to, which have the capacity, which have the good pricing, which will go up, but may still be competitive. In Turkey, the U.S. is 68% of its exports. We're the number 1 market, so not sure how much more juice we can get from Turkey. I think they're probably investing a lot in in capacity over there, but it's unclear how much of that world demand we can soak up if we're already taking about 70% of their juice. In Ukraine, we're taking 33% of their juice. We're the #1 market, but as I hear it, they're sending a lot of not for concentrate juice to the EU right now because they've got a good deal over there. So not making as much concentrates of supplies over there, maybe dwindling a little bit. Poland, we've already mentioned, we are 9% of their exports. We're the #4 market behind Germany, UK, and Netherlands. So I think there is some opportunity there. And the scale on the right there just shows you the dollars per gallon. This is FAS data that doesn't, the prices don't include the transportation, insurance, etc. Here you have basically a scale of the cheap juice producers up to something above the average. So just a reference there. So this is AMS data on pricing. You see that prices have already started to move ahead of the tariffs. I think from the processors I spoke with, I understand that China has already, because of the situation in Ukraine, where China got a lot of its grain, they wanted to diversify away and shore up their grain supply situation. And so China has been ripping out processing apple orchards and putting in these grain fields. And so I think that shortage of at least Chinese juice may have caused a run on some of these other sources, and have started to increase prices already ahead of those tariffs that we saw in February, announced in February, but already known kind of back at the election in early November. So just anecdotally, apparently China is putting back in apple orchards, but they're putting in more Western style orchards, higher density, higher value varieties to service their middle class. So interesting developments over there. So U.S. is up 36% on these apple juice prices. EU up 20%, China up 17%, and Turkey 11% over the last year, according to the AMS National Processing Report. On the processing apple side of things, again, this is data from AMS out of Washington. We see that there's the November election circled there in the middle, and you start to see those processor prices up close to 270% over the last year. So that is it's good news for those calls across the country, getting a little bit better price for them, and not as quite a good deal for those processors, but nice for the growers. All right, so let's switch over to the other side of the equation, the indirect effects. These are the foreign tariffs on U.S. exports. So the challenges in markets that retaliate, sales will be lost, market share will be eroded, and domestic supplies will increase, putting downward pressure on prices. In markets that negotiate or capitulate, sales may be gained, market penetration may increase, and domestic supplies may be lessened, putting upward pressure on prices. Again, impossible to know at this point how that's all going to shake out, how those 75 countries apparently that are in negotiations are going to go. We know that Israel has said they will go to zero. Vietnam has specifically mentioned apples in their remarks about negotiating on this stuff. So there are definitely some opportunities for opening up these markets. I should also say that it's not just about taking tariffs to zero. There are other non-trade tariff barriers that can be negotiated on. So, in South Korea or Japan or UK, where they've, made other arguments for why they don't bring in U.S. apples, and they don't have a tariff, but we're not exporting to them because of these other factors, phytosanitary reasons or other regulatory concerns. those are also on the table. So it's potential. It's that not just increasing the exports that we're making to these countries with higher tariffs, but also opening up new markets. So the severity of these impacts will be determined by the scale and scope of the retaliations or capitulations and the ability to develop new markets more quickly than older ones are lost. So let's look at a cautionary tale. Back in 2000, we were exporting $270,000 worth of fresh apples to India. We spent 20 years building that market to make it our #2 market, export market ahead of Canada. U.S. imposed steel and aluminum tariffs on India, and India retaliated with tariffs on apples. That market fell to nearly zero, just over $1 million 5 years later. At which point the tariffs, those additional tariffs, were removed. And since then, sales have recovered 3,000%, up to $42 million. But just a word of warning on that, the prices of that fruit going to India right now are pretty low. I think they were, in the 23-24 season, they were about just under $19 a box, or 45 cents per pound. Versus a much higher industry average, like 23, 24, or whatever it was. So those are really promotional prices meant to try and win back that business that we lost, not really sustainable prices for the apples going over there. And it's important to know that while you're gone, the Indians don't just stop eating apples. They are finding other supplies. So in 2018, when we're really doing well over there. The U.S. had 45% of India's fresh apple market, and Turkey and Iran had 7% combined. By 2022, the U.S. had 1% of the market, and Turkey and Iran controlled 48%. During that time, India's apple market grew by 20%. So we lost out to Turkey and Iran, a bigger piece of a bigger pie. And that's really tough. I think we're trying to get back in there, but it's not exactly just open. That we're immediately going to go back to where we were. They've moved on in our absence, and we can't afford to be shut out of any other of our top exporting markets, because they too will find other places to get. So on the fresh apple export side, obviously this is our huge trade surplus, and this is the really important stuff. Is our #1 export market, close to 40%. Canada, 15%. Taiwan, 8%. Vietnam, 6%. India, 4%. And of course, a deep bench there. Also, 59 other countries were exporting fresh apples to, worth $320 million. So here are here's the next 10 or so. Markets, again, just looking for, those pink arrows. Those are the administration has not released the list of 75 countries that they've said have come to the table, but a number of different news stories cite specifically Taiwan, Vietnam, India, Thailand, Israel, and Indonesia as countries that have been reported on. And so this is really good. A few of the countries that we do know want to come to the table are those that are in our top 15 export markets, and are really prime opportunities for increasing those exports to those countries. So we hope those negotiations go well. China, again, this is being retaliated against at a 125% rate. This is basically 10.5 million that may be lost as a result of them deciding not to import U.S. apples because of that additional tariff. On the dried apple side, Canada's our #1 destination. 82% of our dried apple exports going there. Japan, 9%. UK, and these are small numbers, but still, important for those folks doing that business. So, again, hopefully that Canadian market, I know that it's tough, and a lot of Canadians have decided they're not going to buy U.S. products, but hopefully we can repair and restore that relationship. Japan is another, again, we already mentioned that as one of those non-trade barrier markets, or non-tariff trade barrier markets, but hopefully we can, again, maintain and improve those relationships. Exports, again, this is the trade deficit on the dried apple side. Our exports were only about 13% of imports. So definitely some room for negotiation there. We're not sending any currently dried apples to China, so not a whole lot threatened there from retaliation or from the 125% tariff on U.S. Exports. So on the juice side, Dominican Republic, we're sending a little bit. Canada, Jamaica, 4%. South Korea, Philippines, and other. So, again, not huge volume, but definitely, and at least compared to what we're importing, but definitely for the folks that are making those sales, we want to make sure that those continue. So South Korea is another of those non-tariff trade barrier countries that we would love to make inroads with. So an opportunity there. And again, this is just to show that our exports are dwarfed by our imports. Finding that amount of that white portion of that bar chart to import that volume is not necessarily our changes that we can make overnight. We're sending a little bit of juice to China, surprisingly. So those sales may go away, but again, it's not huge volume. All right, so let's now take a look at the exposure of the various states to the various countries. Again, not meant to go through this with a fine-tooth comb at this point, but putting it in black and white on these slides so that you can refer to them later when we do have more clarity on how these relationships with these various countries are going to shape up. Washington accounts for 78% of total U.S. fresh apple exports. And here is where they are sending them. So that's worth about $850 million worth of business to them. As we mentioned, there've already been some sales to Mexico and Canada in March that were canceled, or slow sales in Canada because they're not buying American. So again, even without trade barriers, there are impacts that threaten our top two export markets. Here are the opportunities. Again, we mentioned a number of pink arrows there with those countries that we already know have said they wanted to come to the table and start to deal through that July 9th 90-day pause. So China, again, that's probably business that China is going to not go forward with at 125% tariff rate. So a little bit of exposure there to Washington. California is our number 2 top state for U.S. apple exports, 11% of total U.S. fresh apple exports, worth about $123 million. Again, Mexico and Canada on the list. We want to keep that business. So right now, again, we're hoping that they continue to buy our fruit and don't need those markets going anywhere. A couple of opportunities on this list. Again, the Vietnam, India, Taiwan. New York, accounting for just over 1% of total U.S. fresh apple exports. And even though these countries, aren't these states necessarily aren't exporting a ton of fruit, obviously, any fruit that stays on shore is going to depress prices at home. So important to look for the opportunities and the exposure by state, but this isn't to denigrate any of these other states that aren't exporting a lot. Certainly they're supplying domestic markets and need to keep those prices up. $12 million worth of exports coming out of New York. At risk, China, about $100,000. Canada's on this list. Obviously a big chunk of that, given the proximity. And Israel, real opportunity to, if they do go to zero, to increase the exports going over there. Michigan, about 0.5% of U.S. apple exports, worth about 6 million, and Canada and Mexico again on this list. With this, not to say, there's a list of 75. We haven't gotten all the names. We've only gotten about 15 or so names I could find in the press of other countries that said they're coming to the table. So it's very, very likely that a lot of these Central American countries that Michigan is close with are among those that have said they would negotiate. So just don't have that information on hand. Pennsylvania, again, 0.5%, worth about 6 million. Canada's on this list as well. Malaysia is the only one that I found in the press that have said they're coming to the table. Oregon, another 0.5%, worth about 6 million. There's Mexico and Canada again. Most of it's Mexico, with some opportunities there in Vietnam and Taiwan. Virginia, very, very small amount of export volume with India on the list, but always opportunities for getting into these new markets and increasing those export sales. So if we want to look about the potential of which varieties might stay on shore or might be more in demand, given escalations or de-escalations in the trade war. We have data from Washington State Tree Fruit Association on fresh apple exports by variety. We unfortunately don't have that for the other states, but as we already mentioned, Washington's about 80% of U.S. apple exports. So this is a big chunk of those. So what are they exporting? Red Delicious, 28%, over 10 million bushels of that. Gala's number 2, close to 9 million bushels. Some higher variety or higher value varieties in the other category, in the Honeycrisp, the Cosmic Crisps of the world, close to 7 million bushels, 18%. Then Grannies, then Fuji's, then Goldens down the line. So here's where they're sending them to. Washington is sending them to Mexico as their top market, as we saw. Gala sending 15 million bushels down there, led by Gala and Red Delicious, and so on down the line. Going to Asia Pacific is their number 2 market, close to 8 million bushels. They are sending them a lot of Fuji's and others, which is great. Those are the higher value varieties, and some of those reds may be going into the Indian market there, but lots of opportunities in this market. We saw most of those pink arrows. Cambodia, Thailand, Malaysia, Indonesia, South Korea, Japan have all. Those are the ones that have been reported to have already come to the table. So really good potential there in increasing this market from 21% to something more. Canada is their number 3 export market, and here's what they're sending them: a lot of the higher value varieties, those Honeycrisp, Cosmic Crisps going north of the border, and so on down the line. Into South America, Central and South America, sending them just over 5 million bushels, mainly the reds, and 40% of those are the Red Delicious. In this region, Argentina is the one that has indicated a willingness to come to the table. Going into Africa and the Middle East, 3.5 million bushels, again led by reds, close to 60% of this. So in this region, Israel is the big opportunity that might be ripe for growing. In Europe, and yes, in Europe, they're sending them higher value other varieties. A lot of those are going to be the organics, 70% in that bucket, followed by as you see there. Again, UK has said they want to negotiate. but they've already made it clear that they don't want to mess with their regulations around food standards. They specifically mentioned the beef hormone, the hormone treated beef, et cetera. I'm not sure that they're going to drop those non-tariff trade barriers, but anything's possible. So fingers crossed on that. So again, just some of the key takeaways. The U.S. Apple industry is coming off a few tough years. These tariffs will add a layer of costs and uncertainty that will make planning and investing for the future more challenging and may lead to a wider economic downturn. If the tariffs on China and other important trading partners remain in place, the costs of apple juice concentrate will continue to increase both globally and domestically. On the bright side, for the growers, the price of domestic processing apples will also increase, as we've seen already. If the relationship with Mexico and Canada is worsened and they retaliate against U.S. apples, it would be catastrophic for the industry without corresponding opportunities to increase exports in other existing or new markets. So, we're really we're hopeful that that the tensions calm and sort of the way we have it now isn't ideal, with the tariff on China, certainly for the juice processors or for the American economy. But in terms of the apple industry, at this point, with Canada and Mexico being mostly exempt, and some of these 75 other countries come to the table to negotiate, it seems like there's actually quite a few opportunities out there. So I'm hopeful, and we will continue to monitor the situation and keep you updated. So with that, I'm happy to take any questions.
Great. Thanks for your presentation, Chris. We have a couple. Could you speak a little more about the nature of the imports, specifically varieties? I know you covered it with exports, but do you have any quick data or information about the import side of that?
The imported varieties,
Yeah.
I don't know if I have that data. I know that, we mentioned Canada is one of our top importing markets. So it's taking me a while to get back there. And I know that we're bringing in a lot of Honeycrisp from there. But I don't have that. I don't have great detail on how what varieties that we are bringing in. Canada, Chile, New Zealand. I think there's some of those envies or I think probably higher value varieties from most of these countries. I don't know about China. It seems strange to me to be on the fresh apple import side, but certainly from Canada, Chile, New Zealand, some of those higher value varieties.
Okay, and then we have another one. Any bright side in the reduction of imports of other fruits? For example, berries are a tough competition for apples.
Yeah, no, it's a great question. And in fact, I wrote a white paper for Farm Credit that's available on their website, where when I wrote it in early March, the trade war with Mexico and Canada was on. And I was thinking that was going to be a huge opportunity with the price of avocado, strawberries, raspberries could go through the roof. And so I thought some of that demand would shift to apples. But at this point, those products, again, as long as they're produced wholly in Mexico or Canada, and they can prove it, then those are exempt under USMCA. So we don't expect to see a price spike in those other products at this point.
Okay, great. And then you talked about how processing apple prices are increasing. Do you think long term that's still going to continue to happen, or do you think it might go back down.
I'm sorry, you cut out at the beginning.
So the question was about how you said processing apple prices have increased. Do you think that's going to continue long term, or will it go back down?
Well, I don't know about how long the long term is, but I don't think we've seen the top yet. I think that as folks need to shift away from China, if these tariff levels stay where they are, that's untenable. They're going to need to switch to Turkey, Poland, and other places, and those processors, they have a capacity, and it's not gonna increase massively in the short term, and so they're going to take advantage of that increased demand and increase prices further from where they are now. I don't know how high domestic processing prices go. They can only go so far as where the international market will allow them to. Yeah, I don't think we've seen the end of that price increase.
Okay, those are all the questions we have. Feel free to send in any more, but for now, thanks again, Chris, for presenting. A reminder that this webinar recording and Chris's presentation slides will be available on our website and on YouTube. No more questions are coming, so I think we're good to end it. Thanks again, Chris, and have a great day.
Thank you very much.